just to start from the 30,000 foot view, as they say, I'll start off with number one, trends all based on continued progress in fighting the pandemic. 75% vaccinated by early July. So, of course, these are national numbers we're talking about here. Number two, unemployment at about 9.5 million, plus underemployment around 12 million. Division of jobs lost. The lower income is certainly hit at 56%. Medium income is next at 35% of that. And then finally, higher income is 9% of that number. And then number three, 6 to 8% GDP expected this year, highest since 1950. And post-pandemic recovery. That's what we're looking for. Number four, target inflation for the year is at 2%. Fed expected to be able to maintain this. Any comments there, Darren?
Sure. I think, the big one is the division of the unemployment in the categories, 56% lower income. That one of two things is going to happen in that environment, in my opinion. Either they'll go to full unemployment rapidly once people are out and engaging and those jobs will get filled, or some of them are moving towards automation.
Please no.
Yeah, I don't know how quickly companies have responded to get there, but look, that's a trend that's 100% unavoidable going forward.
Right. And has it been accelerated? Yes, it's been accelerated.
Sure, it has. Yeah.
That's horrible. Okay.
The median income, I would say some of those people have shifted to some more at home work opportunities, and that's creating some other trends in and of itself. So the unemployment numbers are supposed to certainly ramp up pretty quickly, which is where the 6 to 8% GDP, particularly coming off a low year, it's easier to hit that high growth percentage.
Right. So when what were we used to, 2-3%?
Typically, yes, that's correct. Yeah. And target inflation, that's inflation is on the top of many people's minds with the big government packages that have gone out as far as spending. So be curious to see if they can genuinely maintain that. There are lots of predictions that inflation will get out of control, but there's chance that a portion of that is just political rhetoric.
Right.
Certainly some of it's valid, and the numbers are big. So I'll be curious to see what ends up happening.
Well, for me, I'll just finish off on this. It just came to me, but the next big bill is about infrastructure, and maybe that'll take up some of the slack that we're worried about between automation and other things.
In the short term, yeah. And short term being 3 to 5 years or so. A bill of that scale has an impact over a long period of time. Personally, I do think about the infrastructure that was created, which was cutting edge, 50 years ago,
right.
75 years ago. Helped pave the way for these huge companies and huge profit and huge growth. I think Elizabeth Warren says it as good as anyone. All these systems that were paid for by taxpayers created the opportunities for growth. And it's time to invest in them again. Yeah. And I personally believe it should be by those who are the high earners to continue to create more opportunities for them going forward.
Great. Okay, well, you want to dig into renter perspective?
Sure.
Yeah.
So a couple of things came up this week. There was a purchase of a rental platform, and a couple months ago, Zillow made an adjustment. So that's why we kind of came up with this topic. There's also just from the pandemic things going on in the rental space, both on the renter side and the multi-unit owner side. So I thought it was a great topic to discuss. So renter perspective, we're starting with there. Some of the main players now, and it's shifted over time. Number one is probably Zillow. They are also owners of, I think I identified Hot Pads in that list. They also purchased Trulia a while back. So they purchased a lot of rental platforms, which really enhanced their rental space. A couple months ago, they started doing something they had never done before. They started charging landlords to put their property on. It's not a huge expense, but for the landlords out there, it's $10 a week now to put your rental on Zillow.
Yeah.
So they are probably the largest.
Well, they're a you're right. They're a $32 billion company. That $10 starts adding up. They need to find a
for
way
sure.
to make it work.
Yeah, people were posting for free for many years. I mean, they've gone, they've been public for a long time, but yeah. So apartments.com, they certainly have been advertising a ton, at least in LA. I don't know about anywhere else, but they were purchased by CoStar, and they're really trying to gain some traction in the rental space. They also purchased years ago, or maybe that's what triggered them locally, was West Side Rentals, which used to be popular, a decade or more ago. I remember using them, and they used to be the main rental source. And then last week, Redfin purchased a company called RentPath, which I had never heard of, in all sincerity.
Well, they have other brands, right? So there's like Apartment Guide and some other things. I forget. But,
right.
Yeah.
But the bottom line is, it says they're trying to compete in this space. And they've got the eyeballs, and, I'm sure there's going to be opportunities for them to make money there and promote rentals in that space. So those are, I believe, the three main sources to seek rentals. And, unlike, if you go onto Zillow and Redfin and any other site now, 99% of what you're seeing is on all the platforms for sure the same way, because it's sourced from agents. It's loaded by an agent, and then it's sourced out to all of those. It's different in the rental space. So in the rental space, it makes me think of 15 years ago in real estate. If you want to look for a property in LA, you go to one MLS. If you wanted to look for a property in another area, you'd have to go to a different MLS. So that's how the rental environment is now and will be. So if you're out there looking to rent a space, look on all three platforms. I believe, and I haven't looked in a while, but I believe Zillow and Redfin are free. Apartments.com charges you. I think that's why they're lagging a little bit in this space personally. And most of these companies are going into big cities and really trying to hit it hard in big cities. May have a very small footprint outside of major metropolitans. But there's a huge, I believe over 50% of occupants in Los Angeles are renters. There's a huge rental space in Los Angeles. Right. So we can expect more tools from these companies even going forward. All right. There are other options that are still valid and still exist and still lead to rental opportunities. Facebook Marketplace, Craigslist used to be a primary source many years ago, over a decade ago. Social networks, people still put signs up in their front yard. Friends, family is a big one because there's a shortage of rentals, quality rentals, for a very long time. I think we're in a little blip right now. And because of that, I've rented spaces where I just went to existing tenants and said, hey, do you know anybody else that wants to live in the building? It's really that simple.
Well, it's certainly competitive now. I don't know if it's to the frenzy of New York, but you're trying to find every angle and trying to get that better rental instead of finding the one that's out there somewhere.
Right, and not getting exposure. It's almost like, there's some competitive components that typically only existed on the purchase side. They're now filtering into the rental side. Like it's not out there where everybody can see it, so maybe you gain an advantage with the personal network or by seeing a sign in the yard or whatever. It's going to get competitive. You're correct, Joe, because LA is a competitive rental market. Okay, trends. This one was very interesting to me. I can't remember if we mentioned it in the past, but the trend of transition homes becoming maybe more permanent, or at least space to space, the Airbnb VRBO platform, where people have chosen to, rent in various locations for a couple months at a time. I'm going to go live in LA for 3 months, and then I'm moving to San Francisco, to New York, to Ireland, wherever you want, because people can work from home. If that flexibility exists, how amazing would that be for people who could move around?
Well, I know, and you've experienced this in some of your rentals, right?
I have.
I think you were mentioning, So.
Yes. It's common to see that transition where people are moving to a new city and trying to figure it out. So you do the Airbnb and then move on, or people are trying a new job, or, to make sure it works before you make a bigger commitment, either on a rental or purchase.
Right.
But to actually use it to just kind of travel the world.
Digital nomads. Yes.
Yeah. Nice. Yeah.
Very cool.
It's great. So then on to a little more of the stats, the Marcus and Milchat stuff. They identified very clearly that vacancy rates had increased to 6.6% in cities, which is up 2.6% from pre-pandemic. They were around 4%. And the suburbs only went up 0.3%, a much smaller increase in vacancies. And multiple reasons for that. Number one, city thrives on lots of activity and dynamics. Often city can be a little more expensive, certainly in the newer complexes and bigger buildings. And people sought more space while they work from home. And that's a trend that's expected to continue in both the purchase and the rental side. So the suburb filled that void. It's expected, next item, that the city will recover pretty quickly, by early next year would be my best bet, where those vacancy rates will then equalize with the suburbs. CDC extended the national eviction moratorium till June 30th. If things continue as they have been with the vaccination and the reduction in the COVID-19 cases, it's expected that this will be the last extension. Now that's just a national element. There's state guidelines, there's city guidelines, and all of those are still in play and questionable going forward. California and Los Angeles have both very highly liberal governmental entities, and they're going to promote tenant protections going forward. So there's going to be more things to navigate even after the 30th, and if the national eviction moratorium goes away.
Got it.
Rental increases are still frozen. When in March of last year, I believe it was, they were frozen by the city, and their early guidelines, which I didn't even do too much more research on because I'm 100% confident they will be altered when the time comes. They basically said we're frozen during the identified pandemic period. I don't know what it's going to take to officially end that pandemic period. I don't expect that will be in June. And then they also said there was a period thereafter that they could not increase. And that period was either 6 months or a year. But I would just pay attention as, maybe as we get into May, the conversations will start again. They'll start crafting LA legislation, city legislation that's going to kind of hone in on those elements a little more. I did see maybe it was an hour ago, I didn't read the article, but it said that we're supposed to be unrestricted potentially in June 15th. That's the goal. Really? For the state.
Wow.
I know.
Well, if you're, of course, if you're in Texas, and no disrespect to Texans, but that full stadium for, was it Texas Rangers? Oh my God, man. 40,000 people.
I don't know. It was just a headline I read, but that's what it said. Okay, so we at number 6, then, as a tenant, there have been opportunities to get some slightly better pricing. Doesn't mean across the board, but there have been for sure. Maybe some discounts, maybe some more, larger space or more amenities in your space. So my suggestion is that if you're thinking about moving, sometime over the next 6 months to a year, maybe because you want a bigger space or a different neighborhood, or from an apartment to a house, you might want to try to do it in the next 6 months. You might have more, you might get a better deal ultimately, because after that, I think by next year the market will be more normalized as to what it was before. Okay.
All right.
Cool. Owning multifamily, boy, that's been an interesting journey. over the past year plus, or looking to be a multifamily owner. So, we have firsthand experience in engaging in that market. So we definitely share that with clients who are considering that. And often that's a place people consider going these days to deal with the cost of housing. A renter can help pay your mortgage and ultimately help get you into a space. Yeah. If you didn't know this, and I think there are a lot of buyers and specifically first-time home buyers that don't, if you qualify, for an $800,000 house, if you move into a rental, purchasing a multi-unit, even duplex, triplex, basically they do take 80% of the rent to allow you to qualify for a higher number. So you might easily qualify for a $1 million duplex. And it is based on the rent collected when you purchase it or the projected rent if it's vacant. So something to think about if you're considering purchasing and the prices are just out of range.
Got it.
Okay, so rates have risen. We've been dealing with that with our buyers. It's always tough when rates go up. What you qualify for actually goes down. But the expectation that I was hearing out of the event was that they're expected to stay within a somewhat tight range, about 30 basis points. So probably low to mid threes. We might dabble in the twos again, but it's not supposed to be go too much beyond that. Is their expectation, predicting out about 6 months. Trying to predict out further than that's incredibly difficult. I do reference the 10-year note and the trend that it has followed, which is often an indicator of where rates are going. It being at 0.52% back in August, it's now at 1.7%. That's a huge move up. Wow. Rates have not moved up that much. Right. If that's moved up 1.2 points, rates have not moved up 1.2 points. And pre-pandemic.
And Darren, just for those that might be a little in the weeds here. So the 10-year note is the interest rate or the loan that the government gives banks to borrow, correct?
A 10-year note is a rate, and yes, that they have to they're paid back if they buy that note.
Got it.
So 0.52%, it's hardly better than having cash with inflation. I mean, you're not going to keep up with inflation if you're getting 0.52% because they're looking at 2%. So you're going to lose money in engaging with any purchasing that's going to give you that low of a return. But you're losing money if you have money sitting in cash right now, for sure. The rates that they're paying are ridiculously low. Got it. Okay, so. And pre-pandemic, which is always worth noting, we want to go back a little over a year, it was 1.88. So it's still below pre-pandemic numbers. And even then, the conversation was how great interest rates are. How at one point they're going to go up. I mean, man, they've been talking about, I think it's funny, but they've been talking about interest rates going up since 2004. I'm more than that, man. It's been like the fear for so long. Yeah, it's been amazing. But they've floated in a lower range for a long time. So yeah, interest rates are still good. Keep that in mind. Okay, so financing conditions on multi-units when we moved into the pandemic and the eviction moratorium went into place. Lenders kind of freaked out a little bit. They're saying, wait, landlords are not guaranteed they're going to get paid rent. How are we guaranteed that we're going to get paid as a lender then? They did, allow forbearances, which in the normal flow of things, they were resistant at first, but they moved into that acceptance pretty quickly. But they tightened standards, meaning that, down payments went up, rates went up slightly on multi-units. And, credit scores had to be a little higher. So all these things moved up. You had to qualify even more than before. And that's a normal progression in dealing with what became a more volatile product during that time. And they're starting to loosen now. And that trend will expect to be continued, assuming we're moving out of the pandemic and they start removing some of the restrictions on foreclosures and requiring rent to be paid.
Got it.
Forbearance, and this is always a point where I sit here and say our perception on a lot of these multifamily units are about smaller multifamily units, mom and pop situation. We're not talking about big institutional investors, huge buildings. We're coming from the mom and pop perspective. That's the world that we're in for sure.
Yep.
So forbearance has helped a lot of mom and pop owners, but it's not enough. I was amazed, and I'm still amazed to this day that both our local politicians, council members, as well as people in Congress don't specifically understand that for non-paying rent and forbearance or not paying a mortgage are equalizing. They're not by any means.
Right.
And a mortgage will vary from owner to owner based on their down, how much they owe, how much they collected rent as far as percentage. But often it might be 50% of what it costs to manage a building. That's not unheard of. So they don't equalize. So forbearance was not enough. You still had to pay the utility bills, do the repairs, do the maintenance, repair things for people that lived in units that weren't even paying. Still had to be done based on LA code, if I get hyper local now. So it hit the multifamily sector hard. There is some money, and I don't know I've not researched further on this, but there has been some money put aside in the COVID plan that passed recently for homeowners. And if it's going to help them recoup some of that, you should research it if you're in that situation a little further. But I wanted to explain that. I think it's important to understand because a lot of people don't understand that. There's been talks a lot about foreclosure, and boy, over the past couple months, as we start seeing a future of being out of this situation, moving beyond the pandemic, I think there have been multiple conversations about that, and I think most of them are squashed, certainly as far as it being anything big, because prices have continued to rise, number one, not on the multifamily space as much, but there's equity in the units more than likely, and some people might ultimately be forced to sell. Hopefully it's not a distressed situation, and that might prevent a reasonable amount of people from going into foreclosure. It's expected to happen still. It's expected to be mild, and the courts have to open up before anything can proceed, though, and it is a process to get something to foreclosure. So there'd be at least a 6-month lag. My guess is, those people who just choose to sell because they've been over encumbered or they're just overburdened with bills related to housing, but they have equity. You might see a little bit of value there, but really a foreclosure market next year at best, and not a huge one.
Got it.
Lastly, one of the biggest things that's bothered me throughout this process is not that, we need to help each other to navigate it, because we do. Yeah. And the burden falls on all of us. Nobody planned this or wanted any of this, but apartment owners have been forced to help navigate this and help continue to house people throughout this process while still taking a beating verbally, continuously, which they don't deserve. So please thank the apartment owners that and thank them for helping navigate this pandemic for all of us and keeping people housed. Yeah.
I think you're right, Darren. I mean, the stereotype of, a landlord being rich, whatever that means, is abused. And I think, we're all on the same ladder. Some are a little higher than others, but we've all been going up that ladder, and we all need each other for sure.
Sure. Yep. Cool.
Well, great, man. So, I just had one question. We can move on. So, in parentheses, you say looking to become a multi-unit owner. So, if you are in that mode right now, would you say kind of wait it out and see how these things settle out a bit? Are there any sort of deals to be had at this point, or maybe not? We should just wait it out a little.
Well, I do think there are some deals to be had. So
Okay.
when we talk about how great the real estate market is, because we sell a reasonable amount of multi-units,
Yeah.
the space that's done okay is if there's a small multi-unit that is truly, if there is a desirable owner-occupant unit, because that's always a plus. The situation where we said you can get into a house and the tenants can help pay. But if you're looking, the units that are strictly investment and don't have a potential owner-occupant purchaser have already, the inventory is high. We talk about low inventory. It's not low in that space. So there are opportunities now.
Great. Okay, so that's the division. Yeah. Are you an owner, occupant, or are you an investor? Yeah.
Right. And if the building applies or appeals to an owner-occupant.
Got it. Okay. Well, great. I think we got that one done.